This is Financially Fit Radio with Corey Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Corey provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Corey Sickles.
Hello and welcome back to Financially Fit Radio. My name is Corey Sickles from Safe Harbor Retirement Group and Wealth Advisors. If you would like more information about what you're hearing during our show today, just give us a call at 614-760-0670 or visit us online at safeharboroh.com. And while you're on our website, click on that radio page. You can check out some past shows and subscribe to our program on Apple Podcast, Amazon Music, Google Podcast, or Spotify. Also, feel free to visit our YouTube page by typing in Safe Harbor Retirement Group to watch videos on different financial topics. And please don't hesitate to reach out to us with questions or if you want to set up a face-to-face or virtual meeting. And remember, all meetings are complimentary and with no obligation. Well, today we're going to talk about really ways that you can set yourself up to create tax-free income in retirement. Taxes more than likely are going up. We know they're going back to the old tax brackets in 2025, but who knows where they go from there. You know, today we're paying really the lowest taxes ever. And I think you just want to be able to make sure you know what you can do in order to create tax-free income. I think it'll be a great discussion. Before we dive into that, let me introduce to you my co-host this week and every week, and that's Tony Shore. Tony, how are you today?
I am doing great. Great to be here with you, Corey. And you're right, tax-free. I like the sound of that. That sounds great to me. And a lot of people don't realize that probably a lot of their money for retirement, if not all, is taxable. It's in a tax-deferred account, so they're going to owe taxes on it when they pull it out. But the idea of having a bucket of tax-free money for retirement sounds great, and I'm sure would help a lot of people in retirement have a more successful retirement. So I'm looking forward to this topic, but, you know, I've been great. I feel good, and just crazy football. The games have been nuts. I guess the Bengals, go Bengals, right?
Yeah, go Joe.
Yeah.
Joe, yeah. I mean, Ohio boy leading his team, to another AFC championship. We'll see how they'll do against the Chiefs here coming up.
Yep.
And, it's always fun. I'm more of a Browns fan, but I don't know how you can't be a Bengal fan with Joe Burrow. So
yeah.
It's been fun. It's hard to believe that, we're already coming to really almost the end of January here.
I know. Isn't that crazy?
The month flew by.
It did.
Yeah. I just, seems like January just started or 2023 just started, and we already are 1 month into this thing. So that means 1 month closer to getting out of this winter as well.
I love that. Yeah, I can't wait to get out of this winter. So it's been a rough one. But you know what? Also, it's a good time to talk about taxes. People have taxes on their minds probably this time of year. But I don't know how many people have, as part of their financial plan, that tax-free bucket set up or tax-free income that they're planning for in retirement.
Yeah, one of the things that I probably see more than anything, Tony, is when a prospect comes in, for the very first time, the majority of their money is in some type of tax deferred, like an IRA or a 401k or a 403b or thrift savings plan. And all that means to me is you're going to be taxed on that for as long as that you have that account. And in most cases, it's going to be probably taxed. You're going to be taxed a certain portion of it for the rest of your life. So, if you do have $1 million and you're in a 20% tax bracket, in theory, you only have about $800,000, right? And so forth. So one of the things that I think that I think it really needs to happen more than anything else, and that is, I think a lot of people out there just need to be educated on how to be able to create tax-free income. Odds are taxes will be going up. And, one thing I hear all the time is, well, I'm going to be in a lower tax bracket when I retire. Well, you might be, but I would probably say somewhere around 80 to 90% of my clients that I work with are in the same tax bracket in retirement that they were when they were working. So in most cases that really doesn't justify on not being able to create tax-free income. So I'm a firm believer in paying your taxes now, which means, let's just talk about, your 401k today. Over the last few years, there's a lot more companies that are offering you the ability to either put your money into the traditional 401k, or you can also put your money into a Roth 401k. Now, the nice part about that, when we start talking about 401ks, Tony, is, if up to, we'll just use this, if you're below the age of 50, you can put $22,500 into your 401k. And it doesn't really matter whether it's a Roth or a traditional IRA.
Wow.
And if you're over 50, you can put $30,000 of that money in there. So what's that really mean to you, right? Well, yes, you will be putting after-tax money into that, but you're done paying the tax on it. For as long as you have that account and as long as you live, that money's going to grow for you tax-free, which means when you take that money out, it comes back to you tax-free as well.
And you're talking about both the principal that you put in and all that compounding interest that it makes. So you don't even have to pay taxes on the gains or the interest, do you?
That's exactly right.
On a Roth, but on
right.
a traditional, you're going to end up paying taxes on anything you take out, principal or interest.
That's correct.
Yeah.
Yeah. And that's why it's just so important. There's just, I'm a firm believer, pay your tax now, let that thing grow. And when you do retire, you don't have to worry about paying, income taxes on it. So, that's the first part that everyone should do, I firmly believe, is one thing that you really need to ask your employer, especially if they're doing the match, and that is do they match, for example, on that Roth 401k side of it? And if they do, then put all your money on that plus the match. And if not, you might have to put the minimum amount on the traditional side, maybe 3%, in order to get the match. So it's something that you don't want to give up that free money either. But again, you don't want to be so out of balance when you retire that you're 90% traditional and only 10% tax-free income. So it's something that I would highly recommend that you do. And again, just like anything, everyone's situation is a little bit different. But I would highly recommend that you work with an advisor like myself that should be able to help you to be able to set up and how to invest those funds in your 401k as well.
Yeah. And especially the Roth option. I bet a lot of our listeners don't even realize that their employer has a Roth option. Not all employers do, but a lot nowadays do offer that Roth 401k option. And putting some money in there is great. And now there's been changes in the law that will allow an employer to contribute or to match in Roths if they choose to do so, right?
That's correct. So again, they have to match. You just need to make sure what side they're going to match on.
Yeah.
Every company could be a little bit different. That's why, again, it's so important that you kind of know the benefits that you do have. So when you do talk with an advisor, you can educate them on how your company does work, because every company's different. We deal with so many clients, and that means we deal with so many different companies out there that they work at.
Yeah, and I wouldn't make any move with my money, even if it's, switching to a Roth or anything like that, a Roth 401k, even if it's through your employee plan or benefits. Consult a financial professional like yourself. Work with an independent financial advisor. They can call your office and get the advice they need on doing these things, right?
That's correct. Yeah, it's one thing that, the one thing we want to do is be able to put together a great plan for you for retirement. And I'm just telling you, it's a lot easier to work with when you have tax-free money coming in there on a monthly basis compared to having to pay taxes on that and that net amount. Yeah. The funny thing is when I ask someone what they make, I'd say 60 to 70% of them tell me what's actually deposited in their account.
Right.
Which is after taxes, right?
Right. Yeah.
So they have most people don't know what their gross amount is.
Right.
They know, but they know what's being deposited, and they know how much they need in order to pay their bills.
Yep.
So when you start, thinking about, it would be great to be able to say, hey, I got $100,000, in a Roth account. If I take 10,000 out, that's 10,000 net coming to you. You don't have to worry about any of that.
Yeah.
Compared to, well, I need to have $10,000 net, but I have to pay federal and state tax off of this. So now all of a sudden, instead of you taking out $10,000, you're taking out $14,000 in order to get to your $10,000 net.
Yeah, those are great vehicles both for tax-free income in retirement. The Roth IRA and the Roth 401k. I think that's smart and a good strategy. And I bet most people who come to you though before they start working with you, they don't have tax-free money or tax-free income possibilities, do they?
Yeah, no, a lot of them don't. So one of the things that we're able to do for them is, I think you really should look hard at putting in money into your just a regular traditional Roth IRA too, right?
Yeah.
So with the Roth IRA, just like we talked about, it's after tax money, so you're not going to get the benefit of that. But right now, if you're under the age of 50, you can put in $6,500 for 2023, or you can do $7,500. That is the catch up if you're over the age of 50, right? So the other part that can be kind of complicated, depends on what you make. For a married couple making over $218,000, then you're actually not going to be able to contribute to a Roth IRA. So there are some income limits. Again, you need to be able to work through your financial advisor. You can work also with your CPA doing taxes, and you have until April, basically April 15th or tax day in order to make your contributions for the previous year.
Oh, wow. Okay.
Yeah, so you can still contribute to your 2022 Roth IRA if you have not done that. Again, you can invest that just like you would with any other type of traditional IRA. We use managed portfolios here at TD Ameritrade, so we have different portfolios you can put that into. But the point of it is from that point forward, it's going to grow, and it's going to grow tax-free. And when you pull that money out, it's tax-free as well. So the nice part is you can contribute actually to a Roth 401k, potentially contribute to a solo, to your 401k at work. And now you be able to create two different type of buckets in order to create tax-free income. So I highly recommend if you can contribute to a Roth IRA that you do that. Again, just talk to your advisor or give us a call, or even talk to your CPA to make sure that you can contribute for 2022.
Wow, that sounds great. Good advice there, Corey. We should probably take a quick break here, though. And before we do, I know you have a special offer for our listeners out there.
Yeah, for our listeners out there, just give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. And when you do call in, again, you can schedule a complimentary no obligation meeting with us. And, our goal is to be able to make sure that you have a worry-free retirement. The best way to be able to do that is to sit down with us. Let us provide you a complimentary financial plan. If you don't, and if you already have one, then we can be that second set of eyes and provide a second opinion on your financial plan as well. Again, give us a call at 614-760-0670. And or you can always visit our website at safeharboroh.com to schedule the complimentary no obligation meeting with us.
All right. Thanks, Corey. And listeners, we'll be right back with more of Financially Fit Radio after this.
There are 96 different months you could file for Social Security benefits. There's over 9,000 combinations if you are married. But that's not all. There's advanced filing strategies that can also be used. By the time you factor it all in, there are over 20,000 calculations that need to be run to find the best way to file for Social Security benefits. To request your complimentary Social Security Maximization Report from Safe Harbor Retirement Group, visit safeharboroh.com. The Social Security Maximization Report will tell you exactly what to do and exactly when to do it.
Hello and welcome back to Financially Fit Radio. My name is Corey Sickles from Safe Harbor Retirement Group and Wealth Advisors. If you'd like more information about what you hear during our show today, just give us a call at 614-760-0670, or visit us online at safeharboroh.com. And again, while you're on our website, feel free to click on that radio page. You can check out some past shows and subscribe to our show on Apple Podcast, Amazon Music, Google Podcast, or Spotify. Also, feel free to visit our YouTube page by typing in Safe Harbor Retirement Group to watch videos on different financial topics. And please don't hesitate to reach out to us with questions or if you want to set up a face-to-face or virtual meeting. And remember, all meetings are complimentary with no obligation. Well, Tony, so far, we really talked about a Roth 401k and a traditional Roth IRA as well, and the best ways to be able to, potentially save for retirement. One of the other ways that I do want to kind of mention, and as I talked earlier, a traditional IRA or traditional Roth, in order to create tax-free, you have a limit on what you can contribute, up to $30,000 if it's in your own traditional, if it's at a workplace, or basically $7,500 if you're over the age of 50 today, right? But there's another one out there that doesn't have any income, and you also have income limits on the traditional Roth too, right? If you make over $218,000, then you're not going to be able to contribute to that. But there is one investment out there where you can actually contribute as much as you want per year, and there's no income limits. And the nice part about that is you only get the upside of the market. So it works like something like we've talked about in the past, which is like annuities, fixed indexed annuities, where you only get the upside of the market and nothing on the downside, so you don't lose any money there. But life insurance can also be a way for you to be able to create tax-free income. So it can do three things for you. A, it can actually provide a death benefit if something would happen, which is more than that account value. B, it can provide income to you tax-free later on. And if you design it correctly, it might even potentially even offer long-term care, later on in retirement as well.
Sure.
So it's a great product. And again, I highly recommend that you would schedule a time for us to be able to, meet with you and discuss it. But it's a great way to be able to put money into something, and you still have access to cash if you do need it as well. But it's a great way to put money into a product and then be able to get the rewards of tax-free income later on in retirement.
Well, yeah, and that's another great tax-free option are like cash value insurance policies, life insurance policies, where it does come out tax-free and it has a cash value, so you can use it for income in retirement. Plus, like you said, the death benefit, so you don't leave your loved ones or your family in a bad situation. That's the main reason you have it, but also the cash value that goes into your tax-free bucket as well. And I like that option. That sounds great to me. So I know that that can be an important part of a retirement income plan too, can it?
It can be. And, one of the things that I would also just let our listeners know out there is this is actually something that I do for myself and my wife. And, we do fund a life insurance product on a monthly basis in order for us to be able to have tax-free income later on in life. Something I firmly believe in. I think it's something that you really need to sit down with an advisor so we can run an illustration for you to show you exactly the way it works and to make sure that it's going to be the right type of product for you. But it's just like anything else. Everyone always talks about being diversified when with your investments. But one thing I think a lot of people don't realize is you also need to be diversified on the way you're going to be taxed. So this is a great way to be able to have a different type of investment. So you are going to be diversified from the investment scheme of it, but it's a good way to be able to provide another solution for you to have tax-free income, later on in life as well.
Yeah, that's huge. Tax-free income in retirement later on in life. It's good to know there are more than one option. And you mentioned something about these cash value life insurance policies that I think is really important, just as important as having tax-free income, and that is the possibility of having a rider or have it set up so if you need long-term care, it can help out with that as well.
Yes, it can be. So it can be a product, again, as I said, three benefits: tax-free income, of course, a death benefit, and potentially long-term care as well. So again, it's something I think everyone should be able to sit down and see if a product like that, meets your solution. It's also a flexible payment, which means, you pay a certain amount per month. If you need to stop it for a month or two and then continue it back up, those types of things that you can do. But the one reason why you definitely want to make sure that you're working with an advisor too, and I don't want to get down to all the complications of it, but if you do it the wrong way, then that insurance policy becomes what they call a MEC, or a modified endowment contract. All that means to you is you overfunded or paid too much money into that life insurance policy, and now that money is actually now becomes taxable. So that's why you really need to work with an advisor that knows what they're doing, so they can make sure that you're going to be within the regulations and the laws to make sure that you're funding that policy the correct way in order to get that tax-free income later on in life.
And you need a plan. I mean, you need to work with a financial services professional, preferably somebody who's independent, who can look at all the different options and say, okay, here's what works best for you, who's not beholden to one company, right?
That's correct. Yeah. I mean, that's really why you want to be able to work with an advisor, to make sure you're going to be diversified and be able to have what you need to have in retirement. And a big portion of that is tax savings, right?
Right.
The last thing I kind of want to talk about, Tony, before we kind of end the show here, and that is, we know, for example, that as you age and as the longer you live, the more medical expenses that are more than likely going to kind of add up over time as well, right? So one of the things that I would highly recommend, and if you can do that today, is be able to contribute to a health savings account or an HSA, right? So you actually get a few different benefits out of that. One is you actually get a tax deduction for anything that for a portion that you put in there. It grows tax deferred. And if you actually use that for qualified medical purchases later on in life, it comes to you tax free as well. So it's a great way to be able to save now, use it later in retirement for medical expenses, right? So if you're an individual plan, you can contribute up to $3,850 today. For a family, you can do $7,750. And then you also can do a $1,000 catch up if you're over the age of 55.
That's huge. Imagine if people had been using this tool or had that tool all along. And I just imagine if my parents had access to that tool and put money in there, how much better off they would be later in life.
Yep. Yeah, I mean, exactly right. So, the goal of today's show is to be able to make sure you're in a situation to be able to create tax-free income. I'm really here to help and guide you. And I'd highly recommend, for our listeners out there, to give us a call here at 614-760-0670. Or again, you can always visit us online at safeharboroh.com. But, I'm here to help create tax-free income for you. But more importantly, I'm here to make sure that you're on the path to have a worry-free retirement. And the best way to do that is to schedule a complimentary no-obligation meeting with me, where we can create a financial plan, or if you already have one, we'll provide you a second opinion. It's so important to make sure that you're on track. You don't want to be in a situation that you're going to be in a position to run out of money later on in life. And that's why we want to be able to create a plan that everyone's going to be happy with. If you prepare, for little things like retirement, it's going to be successful. Don't go in, blinded. Create one. If you don't have a plan today, create it. We're here to help you do that. And again, all you have to do is give us a call at 614-760-0670.
All right. Thanks, Corey. And listeners, that does it for today's episode of Financially Fit Radio with our host, Corey Sickles.
Join us again soon for another episode of Financially Fit Radio.
Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Corey Sickles at Safe Harbor Retirement Group.
Call 614-760-0670 or visit their website at financiallyfitoh.com. Corey Sickles and Safe Harbor Retirement Group are not affiliated with or endorsed by the Social Security Administration or any other government agency. All matters discussed during this show are for informational purposes only. Each individual situation may vary and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation.